Amid the Silicon Valley Bank collapse causing panic amongst its depositors and US banking system, Credit Suisse long simmering problems too erupted into a full-blown crisis on Wednesday when its stocks and bonds plummeted. Credit Suisse is one of the 30 banks identified by the Financial Stability Board as global, systemically important banks. This is Devdatta, and today we will discuss why the fall of Credit Suisse has left many worried. Credit Suisse has had a bad market run for a long time now. On Wednesday, the stock price of Credit Suisse went down 31%, setting a new record low, while the price of its benchmark bonds steeped to low levels, implying that the Swiss lender is in significant financial stress. What set off Wednesday's panic was a statement from Credit Suisse's biggest shareholder, the Saudi National Bank. Asked if he was willing to inject more cash into the lender, the bank's chairman, Ammar al-Khudairi, responded with a vehement no, citing regulatory issues. Even though this happened just one day after Credit Suisse CEO Ulrich Körner claimed that business was improving, it was enough to alarm investors who were already on edge after 3 regional US banks failed in a matter of days, which includes the now infamous Silicon Valley Bank. As the day progressed, and the crisis shook financial markets throughout the world, Swiss authorities issued a statement that evening promising emergency finance to Credit Suisse if necessary. While the bank's stock and deposits rose a little, the impact had already begun. In the wake of this news, Swiss bank bonds fell as low as 40 cents, making them the world's worst performing bonds. Credit Suisse was suspended from trading in Zurich after shares fell 20% to an all-time low of less than 2 Swiss francs. Following the downfall, Morgan Stanley and Citigroup Inc. both fell more than 5%, and JP Morgan, Goldman Sachs and Wells Fargo & Co. dropped more than 3%. On 14th March, the bank announced in its annual report for 2022 that it had not detected serious flaws in its internal controls over financial reporting and has not yet halted customer outflows. This is not good news. Credit Suisse is attempting to regain investor and client confidence following a series of scandals that have led to questions over its credibility. Credit Suisse maintains a domestic Swiss bank in addition to wealth management, investment banking and asset management. In 2019, it was uncovered that the CEO, Pierre-Olivier Bouy, had hired private investigators to spy on high-level personnel, following which he was promptly sacked. This wasn't all. The private investigator unexpectedly committed suicide, the bank stated upon announcing Bouy's dismissal. A month before the public revelation of the infamous Archegos incident in March 2021 involving hedge funds, Credit Suisse disclosed that it was terminating and liquidating numerous $10 billion investor funds transferred to another financial services company, Greensill Capital. Greensill then filed for bankruptcy in March 2021. According to reports, investors lost close to $3 billion as a result of this. This disclosure severely damaged the bank's reputation, heightening investor concerns. The bank's senior leadership has also undergone many changes since 2019, with the most recent occurring in July 2022 when a new CEO was appointed. In January 2022, Axel Lehmann succeeded Antonio Horta Osorio as the group's chairman after Horta Osorio resigned from violating quarantine restrictions during the pandemic. Credit Suisse clarified on Wednesday that senior management in the newly created unit will get up to 20% of shares. After an initial public offering, employees would receive restricted share units that would vest 3 years later and be subject to further holding requirement. That is all we have for you up till now. Stay tuned for more updates as the story unfolds. This is Devdatta Chakravarti for ThePrint.